Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 1.2% on the S&P. Nasdaq, pretty much same there, along with the semiconductor Dow, Russell 2000, transport. They're all up above 1% or more. We got banks cut a bit today, 2.5% positive. Energy is up 3.5. Energy's been moving some, drastic upside turnaround last just couple days or so. We got biotech up 1.3%, healthcare up a little bit. Same with the health home builders. Utilities down. Utilities been struggling last couple weeks. Retail's up 1.1. Emerging market is up 0.7. Bitcoin up 3%. Gold, silver miners continue to struggle here, down 1% or 2. Dollar down half a percentage. Oil is up 2% or so. Treasury bond is down 2.2. VIX is down 10%. Let's stay with S&P 500 ETF Spider 65-minute chart here. So this is exactly what the buyers needed to do, and this is what we talked about on the last night's update. And what buyers needed to do is to get above my short-term and mid-term moving averages. And they were able to do that today. As you can see here, price thrusted after a gap up. This is very important that buyers opened up another gap. We talked about yesterday, buyers needed to fill this gap. Remember, again, keep in mind, last time when buyers, we're gonna be fair in our analysis, right? Last time when buyers failed to fill this gap, and this gap, what happened? Things got hectic for the buyers. Well, same principle, right, applies here. There's an up gap here, and there's a secondary up gap. So you can see the longer these two up gaps remain open, things are going to be hectic for the sellers. But it's a little bit different scenario right now, because now we are reaching that level where the battle of the gaps is going to happen. Because keep in mind, I got this one down gap, secondary down gap, one up gap, secondary up gap. So who is going to fill those gaps first, right? So buyers obviously gonna get up here and fill that. But anyway, so we saw that gap up. We gotten above my short-term moving average here, right? These is short-term moving. Remember, it's been acting as resistance, 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 resistance all throughout the day yesterday after 2 hours of run to the upside. You can see for 4 hours that short-term moving average was making sure that you do not pass through here, sir. If you're a buyer here, you're not gonna pass through and not a, you see that all upper wicks here, buyers really try, they couldn't do it. So when we came to the market this morning, what happened was we gapped up. And this is exactly what we talked about, jumping over the fence. When there are too many resistance that buyers or bears, you know what I mean, they have to deal with, what do? They just gap it over so they don't have to deal with it. Because a lot of times, you know, if they trying to get back up here, it could get rejected, right? So what do? They gap it up. I call this jumping over the fence. The reason why gapping up over this resistance, that the key moving or key resistance level, what's the good part about that is you can see after when it jumped over it, all of a sudden the buyers show up and rally all throughout the day, right? That's first hour, second hour, third hour, fourth hour. But why did we stall at this vicinity? It is not a coincidence. It is not a mistake. It is not a random occurrence that we see 2 hours of fade today. Why here? Because that's the down gap area. So you can see how bears are making sure to protect this level. Bulls already made a move, already got that gap up, thrust, and then rally all throughout the day. So bulls got tired. Once we go to my oscillator, you'll see that bulls really did their best to push it all the way to the top of its band. Bulls got tired, got to that resistance level, which is a gap area, and we saw that little bit of fade. So what can we expect going into today's Thursday? It is Thursday, so there will be no analysis tomorrow because I skipped the weekends. I will be back for you guys on Monday, so I'll try to prepare for you guys for Friday and Monday, right? So if we do see a slide, we want to see buyers using the short-term moving average as new support. So maybe, surf it up and then get up and fill this gap. If not, we got the short-term moving average. We also got mid-term moving average here. I also put in 441. The reason why I put in 441 here is that you see that big upside move, that bullish candle that we saw in the first hour. Well, as far as that momentum, that buying pressure is concerned, if we can keep half of this candle, which is, my short-term moving average already letting us know that that's the level, 441. If we can keep the half of this candle, right? If you own a company, if you own more than 51%, you have the control over the company, right? Similar concept here. This big guy, right? If we can sustain half of its body without breaching it below, there's a good chance that micro-term sentiment can continue to provide that assistance for the buyers. Keep in mind, that's a level where a short-term moving average is telling us that that's an important level, right? Worst case scenario, this thing start coming down heavily and, not able to hold this level, right? And keep in mind, though, if we see intraday, let's say intraday down move like this, right? Intra hour, and then when the hour was over, we see a wick and then see a body like this and close the hour above 441. That still counts. Keep that in mind. That's still gonna count. So you have to see how it closes for that hour. So let's say if this thing start coming down first hour, 439, man, bulls, 440 actually, that's 440. 440 is the level bulls want to protect. As long as bulls can protect this gap and it'll be better if they can keep both gaps open, right? Because we have short-term moving average and mid-term moving average in that vicinity already been cultivating micro-term higher lows and higher highs, right? So if we can see that gaps, being sustained, there's a good chance bulls gonna get up and fill it, right? Bears, obviously, Bears going to come down. There's a lot for Bears right now because not only we're in a midterm, long-term uptrend and midterm overall. Now that price gotten back above my midterm moving average, and you can see my midterm moving average hasn't really curled down or anything like that. We're still kind of rising. So looking at the trajectory of this moving average, despite the fact that we did trade below it for a couple of days, and now that we're back above that, midterm moving average, I'm more neutral to bullish now in the midterm. Remember what I said yesterday? I'm more neutral to slightly bearish as of yesterday. Remember what I said? Things can change because price was still beneath that midterm moving average right here, right? That's why I was neutral to bearish. Unless we see a break above it, we saw that now I'm neutral to bullish. Why not bullish yet? Well, there's a gap here. This gap, if this gap gets filled, if buyers go up and fill this gap, I think a midterm sentiment we're going to turn back to bullish, right? So that's what buyers want to do, fill this gap. Obviously, the best case scenario is gapping up, but I wonder how big gap, how of a bit. Let's see here. Where is my percentage thing? 1% gap up to make that, to kind of gap it over. I don't know if we've seen 1% gap, but it's not something you will see often. But either way, either gap it up or fill this gap. Bears got to go through 441, the short-term moving average, and then a 439. 444, which is a midterm moving average, and the gap bear. So we actually got triple support here. This move really hurt bears in the micro term and the midterm sentiment. In the short term, however, so I want to give benefit of the doubt to the buyers in the micro term. You can see that, right? Micro to short term, we have these cultivations. In the midterm, neutral to bullish. What about the short term? When I say short term, I mean this, right? About a week or so price action. Well, we still have a cultivation of lower highs and lower high. So we don't know yet as of today if that is going to be that lower high. We wouldn't know until this thing start coming down and break below this low. There's a lot of gaps to go through. That's the only way we'll know that that was a lower high, right? So in the short term, we're kind of getting into that neutral to bullish type of environment. Only thing that keeping the buyers a little bit, suspenseful is this gap, right? Let's check out that oscillator and see if we can extract any more information before I let you guys go. So you can see that oscillator, that's the neck. We've been talking about this last couple days. That's the oscillator neckline. We need to break above it. We slightly broke above it yesterday, and with that move, we confirmed it. And you can see the oscillator hasn't crossed down or anything like that. So there's a little bit of move. Bulls can still push if they so choose to do it, right? But we are getting into the level, overbought level. But now that we're back above this neckline right here, we just went through, we did a straight shot. You can see how quickly every single day made that move. We see that bull flag here, another bull flag, potentially another bull pennant or flagging type of pattern also. And so despite the fact that oscillator is at the top of his band, overall sentiment right now is bullish, and the we are seeing that micro term to short term momentum building now that we're back off of both of these moving average. So bears, you guard this gap with all your might. Then perhaps you could have buyers come, or price come down. That will be the first process for the bears, is filling this gap, and we'll have to reassess the situation, right? So battle of the gaps. I'm gonna come back for you Monday night. So until then, this gap, which one's gonna be filled first? And I'll tweet things out tomorrow and Monday morning at 2K Kim on Twitter and Stock Twitch. We'll go from there. Enjoy your evening and good luck trading tomorrow.